In this presentation, we will continue on with our comprehensive problem related to a not-for-profit organization, a non-profit organization for a private college. In prior presentations, we have entered the transactions on the left into the blue area on the right and then posted them to our trial balance worksheet on the right. This time we're going to be doing the closing entries. So we're going to be doing the closing entries. The closing entries will be down below. We're going to be posting these to cell or starting in cell J33. So let's just recap what we have so far. If we take a look at the trial balance that we have been posting to, that's going to be the one up top, the one starting in cell 01. And we have had the beginning balances, we entered the adjustments, and then we have the ending balances. Our closing entry will be closing out these temporary accounts, those similar to the income statement accounts in a for-profit organization, the dark blue accounts here, to what would be the equity section for a for-profit organization, to the net position in the case of the not-for-profit organization. However, we want to have the adjusted trial balance here that we could use to help us to create the financial statements, as well as have a closing balance worksheet. And we want to have a nice clean worksheet so you can see the adjustments and see exactly what is happening. Therefore, we're going to copy these ending balances into the beginning balances in our closing trial balance down below, so that we can then work in this trial balance and then close out our transactions in it, giving us a nice clean transaction list so we can see what the adjustments look like specifically for the closing entry process. And we can also have a post-closing trial balance and an adjusted trial balance. So these numbers then are coming from the ending trial balance that we had completed last time. Ending trial balance numbers now being the beginning trial balance numbers here that we will now be working on. Once again, our objective is the closing entries. That means that the accounts down below, the income statement accounts, or similar to the income statement accounts, the statement of activity accounts, the temporary accounts, we are going to close out to what would be the equity section in a for-profit organization, here being the net assets section. In a for-profit organization, you will recall that we may do this with 4 steps, meaning we might close out revenue to a clearing account called income summary. We might then close out the expenses to that clearing account called income summary, close out the income summary account to what would be the equity account like retained earnings or capital, and then we would close out either draws or dividends to that account as well. Now, here we could group all that together in a for-profit organization in like one long transaction, which is more like what we're going to do here. We're going to group the revenue and expenses together. We're not going to use a clearing account, but we're going to have to deal with the fact that we have the restricted items and the without restriction items. So with restrictions, without restrictions. And so in order to do that, that's how we're going to group our closing journal entries. So we're going to group them by whether they're restricted or how they are restricted. So we're going to start off with the unrestricted items, and I've marked those off with yellow here. So this will typically be the longest type of journal entry that we're going to go through all the yellow items, and we're going to make them 0. Our objective is just simply to make these accounts 0, and then we're going to close out the difference to the net assets without restrictions. So we'll just go through these one by one. I'm going to start with the tuition and fees without donor restrictions, and let's just make our journal entry, construct our closing journal entry. We're going to call this number 12, and so number 12 is the one we are on. And we're going to pick up the tuition and fees without the donor restriction. Now this is a credit, therefore we need a debit to make it go down. So I'm going to be in cell L33. To make a debit, I'm going to flip the sign with a negative of this number. Negative of that number. There we have that. Then we have the tuition, fees, discount, and allowances. It's got a debit balance. We're going to need a credit to make it go down. So I'm going to go back up top. We are in K34. I'm going to say equals. We'll pick up the tuition and fees, discount, and allowances. We want to then be on the credit side, and I'm going to make it a negative of that number. So I'm going to say negative of that 134,500. Then we have the contributions without donor restrictions. It's got a credit balance, so we need to debit it. And notice I went a little bit out of order this time. I'm just going in order of how these show up. So not all the debits are going to be on top. And so if that's easier for you, I would do whatever makes the most sense to you to be able to look back and construct and realize and understand what has been constructed at a later time. So here's going to be the contributions without donor restrictions. It's going to be a debit now because it's a credit here. We need to make it go down, so we're going to debit it. So I'm going to say negative in L35 of that 1,908,000. And the next one we have is going to be the auxiliary enterprise without donor restrictions. It's got a credit as well. Therefore, we're going to debit it. So we'll scroll back up top. We're going to say equals, scroll back down, pick up that account. It needs to be in the debit side. So we're in L36. I'm going to say negative, scrolling back down, of that 110,770 and enter. Then next we have the instruction expense. It's got a debit in it. Therefore, we're going to credit it. So now we're going to go through the expenses. The expenses will typically be items that are without restrictions, and therefore they're all going to go into this journal entry. So we're going to say the instruction expense. We're going to be on the credit side in M37, and we'll say negative, and then pick up the instruction expense. Next, we're going to have the next account, which is the academic support expense. So academic support expense, it's also got a debit in it, so we're going to credit it. So we have that. We're going to be on the credit side in M38. We're going to credit it. And there we have that, and enter. Next, we have the student service expense. So we're going to be in cell K39 equals, scroll back down, and we have the student service expense. And that's going to be on the credit side, so we're going to say negative, and scroll down to pick up that student service expense of the 95,880. Next, we have the instructional support expense. So we are in cell K40 equals the instructional support expense, and enter. We're going to be on the credit side. We're in M40. I'm going to say negative. Scroll back down. Instructional support expense. And then finally, we have the auxiliary enterprise expense. So that's going to be in K41 equals, scrolling back down. We're going to pick up that. Actually, there's going to be a couple more down there, but auxiliary enterprise, enter. That's going to be on the credit side in M41, negative. We're going to scroll back down and pick up the auxiliary enterprise and enter. And now finally, we've got the unrealized gain on investment without donor restrictions. So that's going to be in K42 equals, scrolling back down. We're going to pick up that account. Now it's got a credit in it, so we're going to debit it. So we'll be on the debit side in L42, negative. And we're going to scroll back down and pick up that amount. Okay, so now we're going to post this. Well, actually, we need one more account here, of course, and that's going to be where it's going to close out to. It's just going to be the net assets without donor restrictions, similar to closing out to like retained earnings or the capital account if it's a corporation or a sole proprietorship, respectively. So we'll pick up that amount. We're going to put this on the credit side. So on the credit side, I'm going to say negative SUM and do our trustee sum formula, summing up all these accounts. So we're going to sum them up, and then there we have it. Now let's post these out and see if it does what we would expect it to do. What do we expect it to do? We expect it to make all these yellow accounts go down to 0, and then we'll put the difference to the net asset account. All right, now that we have our expectations, we're going to go back up top. We're going to the tuition and fees without donor restrictions. We'll scroll back down. We are in cell Q45 equals, scrolling back up, we're going to pick up that 5,631,430, bringing it down to 0. So that does what we expect it to do. Then we have the tuition fees with tuition and fees discount and allowances. That's going to be here. We're going to be in cell Q46 equals, scrolling back up to that 134,500 and enter, bringing it down to 0. Next, we have the contributions without donor restrictions. That's going to be here. Contributions without donor restrictions. We are in cell Q47 equals, scrolling back up, picking up that 1,908,000 and enter, bringing it down to 0. Next, we have the auxiliary enterprise without donor restrictions. So we're going to scroll back down. We have the auxiliary enterprise without the restrictions. We are in cell Q52 equals, scrolling back up, we're going to pick up that amount, that 110,770, bringing it to 0. And the next item we have is going to be the instruction expense. So we'll scroll back down to the instruction expense. That's going to be in cell Q53, where we will say equals, scroll back up to the instruction expense, and enter, bringing it down to 0. Next, we've got the academic support expense. So we're going to scroll back down and pick up the academic support expense in Q54 equals, scrolling back up to that 2,042,000, bringing it to 0. And then we got the student service expense. So we're going to scroll down to the student service expense. That's going to be in Q55 equals, scrolling back up to that 95,880, bringing it to 0. And then next we've got the institutional support expense. So we'll scroll back down to the institutional support expense. That's in Q56 equals, scrolling back up to the institutional support and enter, bringing it to 0. Next is going to be the auxiliary enterprise expense. That's going to be in Q57 equals, and we'll pick up that 145,510, bringing it to 0. And then we have the unearned gain on investment. So that's going to be down here, unearned gain on investment. That's in Q60, where we will say equals, scroll back up to the unearned gain on investment, and enter, bringing it to 0. All right, so that looks like it's doing what we would expect on all the yellow accounts, bringing them to 0. We are now going to put the difference, the balance, into the net assets without restrictions. That's going to be in cell Q43. Within cell Q43, we will say equals, pick up that 283,740. That brings this amount up, and that should put us back in balance. So that does seem to put us back in balance. Our next transaction is going to pick up some of the accounts that have restrictions. So now we're looking at some of them that would have restrictions, which we will then close out to the net assets with donor restrictions. And we're going to close out this time to the second journal entry, the contributions with donor restrictions for grants, contributions with donor restrictions time, contributions with donor restrictions capital campaign. And then we're going to close them out here. We're going to save the ones related to the endowments for a future time, for another journal entry. All right, so this is going to be number 12. Again, the second 12 journal entry. We could call it 12B, but I'll keep it there. And then we're going to say this has a credit in it. It's kind of like an income account. So we're going to debit it because we want to do the same thing. We want to make it go down to 0. So we're going to pick this one up. I'm going to say this is going to be the contributions with donor restrictions for the grants. This is going to be the contributions with donor restrictions for time. And then we'll pick up the contributions with donor restrictions for the capital campaign. These are all going to be debit balances. So we're going to be on the debit side. I'm going to take this credit amount, flip the sign by hitting, instead of equals, a negative of that number, and enter. Then we're going to pick up the contributions with donor restrictions for time. And so I'm going to say negative of this number and enter. And then we have the contributions with donor restrictions for the capital campaign. We are in L47. We're going to say negative of this number. And then we're going to put that into the net assets with donor restrictions. Net assets with donor restrictions. We want to be on the credit side now, where I'm going to say negative SUM, negative sum of these accounts. All right, so there we have it. Let's post this out. Let's see if it does what we expect it to do. And once again, what do we expect it to? We expect these accounts to go down to 0 and the difference to be posted to the net assets with donor restrictions. All right, let's do that. We're going to say contributions with donor restrictions for the grants. That's going to be cell Q48 equals, and we're going to pick up that 579,200, bringing it to 0. Then we're going to pick up the contributions with donor restrictions related to time. That is in cell Q49, where we say equals, scroll over to the 738,400, bringing it to 0. And then we're going to go to the contributions with donor restrictions for the capital. That's going to be in cell Q51, where we say equals, scroll over to the 613,400, enter, bringing it to 0. Then we have the net assets with donor restrictions. Net assets with donor restrictions, that's going to be posted to cell Q44, equals, scrolling down to the 1,931,000 and enter, bringing it up. That should put us back in balance down below, so we are back in balance. Next, we're going to close out the accounts that are going to be related to the endowment. So that's going to include the contributions with donor restrictions for the endowment and the unearned gain on investments for the endowment. All right, so we're going to close them out. Those, of course, will be recorded as well to the net assets with donor restrictions. So we'll do that in a new journal entry. Also, number 12, we could call it 12C, but I'm just going to keep the 12 here. We're going to pick up that this amount. It's a credit, so we're going to debit it. So we're going to go back over here. We're going to say this equals the contributions with donor restrictions related to the endowments. We need to make it go down. It has a credit, so we need to debit it. We will be on the debit side in cell L50, where we will say negative of that 1,941,200. Then we're going to pick up the second account, which will be down below with a little orange dot next to it. That's going to be the unrealized gain on investments with donor restrictions with regard to the endowment. It also has a credit balance in it. Therefore, we're going to debit it to make it go down. We are in cell L51. So I'm going to say negative of that number and enter. So there we have that. Now the credit side is going to be the negative sum of these numbers, or we're going to say negative SUM. This is the plug formula and enter. And this is going to go to the net assets with restrictions. So we're going to call that net assets with donor restrictions. So there we have it. Let's go ahead and post this out and see if it does what we expect it to do. And yes, what we expect it to do is make these accounts go down to 0 and the difference go into the net assets. Okay, so we're going to record the contributions first. Contributions. We're going to be over here in cell Q50. Within Q50, we're going to say equals. Scroll over to that 1,941,200 and enter, bringing the balance down to 0. Then we're going to pick up the unearned gain on investment, that 5440. Scrolling back down, we're going to be in cell Q61 equals. Scrolling back over to that 5440 and enter. There we have that. Then we have the net assets with donor restrictions. Scrolling back up. Here's the net assets with donor restrictions in Q44. Something is in it. Therefore, we're going to say F2 plus F2. Scroll back down and pick up that 1,946,640 and enter. So there we have that. Now we should be back in balance as we are. Everything's looking good. We just need to close out these last two, these funny two kind of accounts. The net assets released, satisfaction of purpose restriction without donor restrictions, and the same thing with donor restrictions. These are the ones transferring the assets from one account to another, to restrict from restricted with restrictions to unrestricted. Okay, so let's close these out. We're just going to do two transactions to do this. The simple thing is that we're just going to close out the without restriction to without restriction. We're going to close out the with restriction to the with restriction net assets. So that's all we have to do. So this one, we could see that it has a credit balance, so we're going to debit it to make it go down. So we'll make another transaction. We're also going to call it, once again, number 12. There's a lot of number 12s. And we're going to pick up the net assets released, satisfaction of purpose restriction without restrictions. That's going to be on the debit side. We're in L54, negative of that number. Then we're going to have a credit of the same number. We're going to close that into the net assets without donor restrictions. Net assets without donor restrictions. That's the one we're on, right? Let's double check that. Yes. Okay, so let's do that. We're going to post that out that. Here is the debit. We're going to post that here. That's going to be in cell Q58 equals. We're going to scroll over to pick up that 530,000 and enter. And then the other side is going to go to the net assets without donor restriction. That's going to be in cell Q43. Something is in it. Therefore, we're going to say F2 plus F2. scroll back down, and pick up the credit amount. And so there we have it, but the credit amount, I picked up the wrong account. It looks like it should have picked up net assets, this one. Okay, so there we have it. This account is going there, and it should be net assets without donor restrictions. That puts us back in balance down below. Now we just need to close out this last one. This one has a debit balance, so we're going to have to credit it. I'm going to make a new journal entry, number 12. Going to put it on the bottom. So we're going to pick this one up on the bottom, and that's going to be the credit. So I'm going to say negative of that number. And then the debit's going to go to the net assets with restrictions. So we'll scroll back up top, net assets with donor restrictions, and that's going to be the debit side. Okay, let's post this out. So we're going to say this is going to be the 560 net assets with restrictions. Scrolling back up, net assets with restrictions. That's in cell Q44. Something's in it. So I'm going to say F2 plus F2. Scroll back down, pick up that 530,000. Then we have the net assets released. That's going to be down here in cell Q59. Something or nothing's in it. So we're going to say equals and point to that 530,000 and enter. And that should bring it down to 0 as it does. That brings the totals here. We're back in balance, so that looks good. This is going to be then our post-closing trial balance, where we can see that we have the assets, the liabilities, and then the net assets, and we have no temporary accounts. They have then been closed out. We can see that the assets minus the liabilities add up to the 17,439,380, which of course is the same as our net assets, which is similar to equity in a for-profit organization, 17,439,380. And that is going to be the same if we were to add up all the blue accounts before we did the closing process, as we could see here, 17,439,380. So that's where we're going to stop here. Next time, we're going to make at least part of the financial statements from these numbers.